A very good afternoon, all of you. Hope you all are doing good. May blessings be upon you all. Welcome to Commerce First Year classes. In the last two classes, we have learnt about preparing trading account, P&L account, and in yesterday's class, we started balance sheet. Okay, so these are all the components of final accounts of a sole proprietor: trading account, profit and loss account, and then balance sheet. Balance sheet is a statement that is prepared by taking all the assets and liabilities of the firm, and we arrange them in order that is either in liquidity order or permanence order, I told you, and we are following permanence order. Okay, so what is balance sheet? I told you it is a statement, it is a position statement prepared on the last day of the financial year ending, and it is prepared by taking the assets and liabilities of the firm as on the closing day. We will take one small question. Okay, we'll prepare balance sheet. Page number 274, question number 13. Page number 274, question number 13. Okay, we are preparing balance sheet. We are preparing balance sheet of Madhavi Traders as on 31/12/2016. Okay, so what are we preparing? We are preparing balance sheet of Madhavi Traders as on 31st December 2016. Okay, this is our liability side amount, assets amount. Okay, remember, no, all the obligations on the liability side, all the properties on the asset side, right hand side. Yeah. First one is net profit. Net profit is added to capital. Net profit is added to capital. What is net profit? Net profit is the result of your profit and loss account. So we add that net profit given as 4,500 to our capital. Capital is given as 50,000. Capital is given as 50,000. Next, investments. Investments are assets. Investments are assets. 10,000. Furniture. Furniture is also a fixed asset. Furniture, 3,000. Machinery. Machinery is also an asset. 14,500. Debtors. Debtors are also assets. They are current assets. 15,000. Bills receivable. Current asset. 12,500. Loose tools. Loose tools are like spanner, screwdriver, hammer. All these things are called as loose tools. Okay, that is 3,000. Outstanding salary, that is salary payable. If only salary is there, that is an expense we take in P&L account. If only salaries is there, it is an expense, we debit it to P&L account. Outstanding salary means date, okay, the date is due, not paid. The date is due, but it is not paid, then it becomes a liability, it becomes a obligation. So outstanding salaries. Outstanding salaries are given as 500. Creditors. Creditors. 6,500. Cash. 1,000. Asset. Closing stock. Asset. Closing stock is also an asset. Okay, so we have taken all the items on both the sides. Now let us take the total of these two. The total of these two is 54,500. Let us do the total and see what is the total we are getting. It should tally, you know. So 56, it is 62,500 on the liability side. 55, 55, sorry, 61,000. 61,500. 17, 27, 27, 42, 42, 43, 53, 55, 56, 58, 58, 59, 61,500. See, both the liabilities and the asset side total is same. If you remember, yesterday I told you, balance sheet is prepared basing on a accounting equation called as total of asset is equal to total of capital plus liability. The same thing is happening here. You see, this is the capital, these are the list of liabilities, add up, that is 61. And these are the total assets, that is also 61,500. Okay, we are done with this. Now let us take one question where we will prepare trading account, P&L account, and balance sheet. This is what you are supposed to do in your IPA exam. It will give you a trial balance. Out of that, you have to prepare trading account, profit and loss account, and balance sheet. Okay, so we are doing a complete problem now without adjustment. Okay, we are doing a complete problem where we are preparing trading account, profit and loss account, and balance sheet. Okay, so let us first draw the formats. We are doing it simultaneously. Okay, we'll first prepare trading account. Okay, so this is our trading account, let us say. Trading, P&L account, and then, okay, we'll prepare trading P&L account first. Formats ready? We are ready with trading account, format, trading account. See what is the question? From the following trial balance, prepare trading and balance, profit and loss account and balance sheet. Question number 14, page number 274. Okay. Let us take all the items which will appear in trading account first. Okay. Then we'll go with profit and loss account. and then the balance sheet. Okay. Trading account for the year ending on. Profit and loss account for the year ending on. Particulars. Particulars. Okay. Debtors. Debtors are a asset. It will go to balance sheet. Cash, asset, balance sheet. Furniture, asset, balance sheet. Purchases. Purchases we will take in trading account. Purchases we will take in trading account. The amount given is 3,500. I wrote it in the inner column because if we have any purchase returns, we will deduct and take the next figure in the outer column. Sales return. Next is sales return. So that I will deduct from sales amount. Sales return are given as 300. So when I write sales, I will deduct it. Opening stock. Opening stock. Opening stock is given as 2,000. Then rent and taxes. Rent and taxes are indirect expenses, official expenses. Let us take to P&L account. That is 750. What I am doing is I am preparing trading and P&L accounts simultaneously. Balance sheet will prepare afterwards. Okay. Next, insurance. Insurance is also an official expense. It is an expense incurred in office. So I'll take insurance 350. Then wages. Wages are a direct expense. Wages are a direct expense. We take in trading account. Next, carriage. Carriage is also a direct expense. We take in trading account. Carriage is given as 500. Then discount. Discount allowed is debited to P&L account. Discount allowed is debited to P&L account 650. Oil and fuel. Oil, fuel, gas, water, power. All these are the expenses we incur in a factory. All the factory expenses we take in trading account. So oil and fuel. It is 550. We have drawings. Drawings will take in balance sheet. Carriage outwards. Carriage outwards are selling and distribution expenses. We'll take here. Carriage inwards will take in trading account. Carriage outwards in P&L account 300. Then we have stationery. We have stationery. Stationery is again an expense in the office. Then capital. Capital will go to balance sheet. Sales. Sales is given as 9,000. 9 minus 3, 8,700. Purchase returns. Purchase returns we will deduct from purchases. Purchase returns we will deduct from purchases. 500 you will deduct, you'll get 3,000. Last item is creditors. Creditors are a liability that will go to balance sheet. Closing stock. Closing stock is always given below the trial balance. Closing stock is not taken in the trial balance. It is given below the trial balance because it is an adjustment entry. It will have two effects. It will be shown twice. Once in the trading account by closing stock. By closing stock 2,600, we will show once here and then again we'll show it in the balance sheet. So it is not a part of trial balance. It always will be given below the trial balance. Remember this, it's a adjustment entry. Okay. So now let us close trading account and P&L account. Then we will take up the balance sheet. Okay. So see. 7631. It is 11,300 on the credit side. 11,300. Then on the debit side, if you deduct 35868 6,850. 6,850. Deduct what we'll get? We'll get 54 and 4,450. What is the balancing figure? 4,450. Guys, what do we call this difference? What do we call this net difference? We call this as gross profit. Gross profit carried down to profit and loss account. Okay, the result of trading account is what? It is gross profit, and gross profit will be transferred from trading account to P&L account. So in the P&L account, the first item on the credit side would be gross profit brought down 4,450. What it is? 4,450. Now let us balance this 4,450 on the credit side. Okay, credit side we have 4,450 and deduct the total of debit side. It is 750, 350, 1100, 1100, 17, 17, 2,650. It is 2,650. The credit side total is 2,650 and the net difference is 1,800. What do we call this 1,800, guys? We call this as net profit. Where do we carry this? We will carry it to the balance sheet. Net profit carried down to balance sheet. So this net profit will be added to, it will be added to the capital. Net profit will be added to capital. Okay, so now the next slide here, I am preparing balance sheet. We have left few items there which appear in balance sheet. So now I am preparing the balance sheet. Balance sheet is a statement prepared by taking assets and liabilities of the firm as on any date. So balance sheet is also called as a position statement. It is also called as position statement. So we are preparing position statement. We call it as balance sheet as on. What is the date given? Balance sheet date is not given. So just keep it as it is, balance sheet as on. The left hand side is liability side. The right hand side is asset side. So what were the items we left? We'll take all those here. Debtors we had not taken there. Debtors, because debtors are a asset. Debtor means it is the amount the customer owed to the firm. Okay, the firm has sold goods to A, B, C on credit, and so A, B, C are called as debtors to the firm. It is the amount receivable from the parties, from the customer, that happens to be the asset. Then we have cash. Cash is an asset again, 12,500. Then we have furniture. Furniture is also an asset. It is a fixed asset. It is 10,000. Then purchases we have taken, sales return, opening stock, all these we have taken. Drawings. Drawings we will deduct from capital. Drawing is given as 2,900. That we will deduct from capital after adding net profit. So drawings given is 2,900. We will deduct this. Okay. Cash, furniture, purchase, opening stock, rent, insurance, wages, discount, oil. Then capital is 40,000. Capital is 40,000. Creditors. Creditors are given as 2,500. Okay. Then closing stock we should take. I told you, no, closing stock will have dual effect. It is an adjustment entry. It will first appear in the trading account, then again it has to be taken in the balance sheet on the asset side. Okay, now there is one thing we have to add up here. What is that? It is net profit. When we are prepared P&L account, we had a profit of 1800. That 1800 will be added here. And 2900 will be deducted. Okay. So 41,800 minus 2,900. 38,900. 38,900. Okay. Is it correct? Yeah. Now do the total of this. And as you know, the total on the asset side and liability side should be equal. So it is 41,400, 26, 36, 38, 40, 41,400. So our balance sheet got tallied. So we are correct. The total on the liability side is equal to total on the asset side. Okay. So this is a complete problem as you have to do in the examination. Only thing what we have not taken into consideration is the adjustment. Yes, of course, we did take one adjustment entry. I told you, closing stock is one of the adjustment entries. There are 5 entries which you need to practice enough. There are so many entries, adjustment entries, but for you, IP, 5 adjustment entries are enough for you. Okay, so we'll take one more problem without adjustment. Then we will discuss what are the adjustment entries. Okay, so I'm taking the next question, page number 275, question number 15. From the following trial balances, prepare final accounts for the year ending on 31st March 2015. We'll follow the same procedure, preparing trading and P&L account first, then preparing the balance sheet. Okay, so first step, I am preparing trading and P&L account. In the first step, I am preparing trading and P&L account. Ready? Sure. So this is our trading account. Is the name of the firm given? Name of the firm is not given, only the closing year, the date is given, that is trading account for the year ending on 31st March 15. Similarly, profit and loss account for the year ending on 31st March 2015. These are particulars, amount, particulars, amount, particulars, amount, particulars, amount. What are we preparing? We are preparing trading account, P&L account and balance sheet. We are preparing, in the first step, we are preparing trading account, P&L account simultaneously. Then we'll prepare balance sheet. Okay. So purchases will appear in trading account on the debit side. The amount is 7,100. I'm taking it in the inner column because we may have purchase returns which we have to deduct from purchases and take the net purchases in the outer column. Then we have, this is 6,500. Purchases are 6,500. What is 7,100? Those are the opening stock. Opening stock. Returns given on the debit side. Remember this, returns in the debit column are sales returns. They are returns inward. Returns if given on the debit column, in the debit column, they are sales return, and returns if they are given in the credit column, they are purchase return. Returns given in the debit column are sales return. Returns given in the credit column are purchase return. So these returns given in the debit column are sales return. Those we will deduct from sales minus returns. What is the value of returns given? 800. Then rent and taxes. Rent and taxes is a P&L item. Rent and taxes is a P&L item. If it is factory rent, we will take in trading account. If it is only rent, we'll take it in P&L account. Okay. Then debtors. Debtors are a asset. We'll keep it aside. We'll take while preparing balance sheet. Salaries. Again, salary is a P&L item. Salaries. What is the salary? What are the salaries item given? 6,500. Next, machinery is the asset. Motive power. Motive power. It is a trading item. I told you, no, power, coal, fuel, gas, all these will take in trading account. Motive power. These are the expenses related to a factory. So all the expenses related to factory, I told you, will take in trading account. Insurance is a expense in the office, administrative expense. Insurance is a administrative expense, 900. Then depreciation. Depreciation is a decrease in the value of asset. Okay, that is a operating expense, non-cash operating expense will take in the P&L account debit side. Wages. Wages are a direct expense taken in trading account, 2,700. Then furniture is an asset. Drawings will be deducted from capital. Advertisement is a selling and distribution expense, P&L. Advertisement will be debited to P&L. Then we have sales. Sales are how much? 15,000. From 15,000 deduct 800 and take 14,200 in the outer column. Capital will go to balance sheet. Bills payable will go to balance sheet. Then interest received, it is an income credited to P&L account by interest received. How much? 2,650. Then loan is there. Loan is a liability that will appear in the balance sheet. And one adjustment entry we have, that is closing stock. As I told you, closing stock will appear twice. Once in trading account, and then in the balance sheet. Closing stock is given as 3,000. Okay. So all the entries are taken into consideration. Now let us do the balancing part. Let us check what are the results of trading account and P&L account. What is the total on the credit side? It is 17,200. It is 17,200. And debit side, 7,198. 10,650. Deduct 6,550. 6,550 we are getting. Sorry. Purchases we have not taken, no? Purchase returns are not there. Purchase returns are not there. $6,500. So deduct that 6,000. Do it again. I'm doing it again. Credit side total is 17,200. And debit side total is 15,600. 16, 3, 16, 3, it is 17,150. So we have a gross profit of rupees 50 only. This is gross profit carried down to P&L account. Gross profit carried down to P&L account. Right? Next is this amount, this gross profit will be carried forward in our profit and loss account by gross profit brought down 50. Gross profit brought down 50. Okay, now let us balance the P&L account. You see here in P&L account, debit side is more. See, debit side total is more. 8,900, 9,600, 10,600, it is 10,800. 10,800. Okay, so debit side it is 10,800 and credit side total is 2,700. Deduct, we have a net loss of 8,100. We have a net loss of 8,100 and net loss we will write on the credit side. If it is profit, we write on the debit side, no? Similarly, it is net loss, so we'll write here by net loss 8,001. And where do we transfer this? Carried down to balance sheet. It is carried down to balance sheet or say capital account. So next step is what? Capital account. Balance sheet. Next step is balance sheet. We have to prepare balance sheet. Okay. Ready? Balance sheet as on 31st. What is the date given? 31st March 2015. Left hand side is our liability side. Right hand side is our asset side. Okay. Now let us see what are the items we left while preparing trading P&L account. We left because they belong to balance sheet. Okay, purchase, read opening stock, returns, debtors. Debtors are 10,000. They are a asset. Salaries, machinery. Machinery again is a asset. Machinery is a asset. 9,500. Then the insurance, depreciation, wages, furniture. Furniture again is a asset. 6,400. Drawings. Drawings we deduct from capital. From capital, we will deduct drawings. Drawings are given as 1,000. Then on the credit side, sales, capital. Capital is 30. Bills payable, it's a liability. Bills payable is a liability, 3,000. Then bank loan. Bank loan, 5,000. Right? And then closing stock. Always remember this. It's the adjustment entry, always given below the trial balance, and it has to be taken in trading account as well as in balance sheet. Okay. Now, what is missing here? It is the net profit. But did we incur net profit? Actually, no. We did not incur net profit. Rather, we had a net loss. If it is net profit, we add. If it is net loss, we have to take deduct. 8,100 we have to deduct. So from 30,000, deduct the net loss. Okay. And deduct drawings. So we'll have 20,900. Now see what is the total. See the total. It is 28,900. Check if it is right. 28,900. Here also 13, 19, 28,900. That's all. We have completed the problem and the balance sheet got tallied both on the asset side and liabilities. Okay. So we have practiced problems doing trading account, P&L account and balance sheet, isn't it? But what do we get in exam is a final account with adjustment. Final account with adjustment. Okay. We did one of the adjustments. Closing stock is one of the adjustment entries. Let us see what are the others which we can expect in exam. There are so many adjustment entries, but for IP syllabus, there are 5 to 6 adjustment entries. If you are perfect with those and their effect, so sir, first of all, what are these adjustment entries? Adjustment entries are those entries which are not given an effect before the preparation of trial balance. Or for you, I'll make it very simple and tell, एक बात समझ लो, एडजस्टमेंट एंट्री वो होती जो ट्रायल बैलेंस के नीचे देगा आपको क्वेश्चन में. आई रिपीट, adjustment entries are given below the trial balance. Point 1. Point 2 is adjustment entries will have dual effect. They will be shown twice in the finalization of account. Adjustment entries are a peculiar entries having a very special character that they will appear twice while preparing the final account. Once they will appear in trading or P&L account, and once they will appear in balance sheet. I repeat, sir, what are adjustment entries? Adjustment entries are those which are given below the trial balance in the question, and they have dual effect. They will be shown twice, once in trading or P&L account and once in balance sheet. So now we will learn what are those adjustment entries which are expected in exam. The first one, what we have seen, adjustment entries. Adjustment entries. First one is closing stock. Closing stock. What are the dual effects? First, it will appear in trading account. Which side? The credit side. Closing stock will appear on the credit side of trading account. This is effect 1. What is the second effect? It will appear on in the balance sheet on the asset side. If you recall, in the last 2 problems, we did the same. We exactly did the same what I have written on the board. Closing stock, I have taken on the credit side of trading account, and then in the balance sheet, I have shown it as a asset. Second adjustment entry is outstanding expense. I will take, for example, outstanding salaries. That is, the due date has passed. Suppose the employer is supposed to pay, the firm is supposed to pay salary on 31st, but they did not pay by 1st of April or 2nd of April. Then we say that the salary due date is gone. Now the salary is outstanding. Okay. Now the salary is outstanding. So what do we do? What is its effect? First effect is, it will see, where do we show salaries? Salaries will show in P&L account. No, this outstanding salaries in P&L account, debit side. What do? We add the outstanding salaries to salaries paid. Where do we show outstanding salaries? First, added to the salary amount given in the trial balance, which are the salaries paid. And salaries paid we take in P&L account. So the first effect is we will show it in P&L account as an addition to salaries paid. Second, we show it as a liability. Second, we show it in balance sheet as a liability. Sir, why is it liability? Of course, it is a liability, no? If it is due and not paid, the date has passed and you have not paid the amount, it becomes an obligation. वो हमारे लिए कर्ज हो गया. So that is a liability. So this is the second effect. So it can be either outstanding salaries, it can be either outstanding wages, it can be either outstanding rent, or it can be outstanding taxes. The effect is same. If it is outstanding wage, add to wages in trading account and show it as a liability. If it is outstanding rent, add to rent and show it as a liability. If it is outstanding taxes, add to taxes and show it as a liability. Is it clear? That. Then the next expected one is prepaid expenses. And here, very common, we get prepaid insurance. Insurance premium paid in advance. Insurance paid in advance is a asset to us. It is an item pertaining to next year. नेक्स्ट ईयर का इंश्योरेंस अमाउंट अभी से हम भर दिए, तो अब के इंश्योरेंस में से इसको हम माइनस करेंगे. तो व्हाट इज द फर्स्ट इफेक्ट इन P&L अकाउंट? डेबिट साइड, P&L अकाउंट डेबिट साइड, व्हाट डू? वी डिडक्ट द prepaid insurance, deduct the prepaid insurance from insurance paid. Deduct the insurance, prepaid insurance from the insurance paid, and then show it as a asset. Paid in advance will be our asset. Received in advance, it is a liability. Amount due is a liability. But here it is paid in advance. So in balance sheet, we will show it as a asset. Go through these adjustments, very, very important. Adjustments are a special entries having dual effect, once in trading or P&L account and once in balance sheet. Okay. The next adjustment entry is depreciation on fixed assets. Depreciation on fixed assets. Or let us say, for example, I'll take depreciation on machinery. It can be on any of the fixed assets. It can be either on, say, machinery, furniture. It can be on any of the fixed assets. I am taking, for example, as depreciation on machinery. What is depreciation? It is the decrease in the value of asset. The value of asset year by year decreases due to certain reasons like continuous use, afflection of time, like that, the value will decrease. And the decrease is a loss to the firm. The decrease is treated as a operating expense. It is treated as an expense to the firm. And where do we show? If it is given as an adjustment entry, what is the first effect? First effect is in P&L account, show it on the debit side. Depreciation, normally we'll give depreciation as a percentage. Let us say, suppose depreciation on machinery is given as 10% per annum. Depreciation is to be provided at what rate? I said it is 10% per annum. Suppose in the trial balance machinery is given as 30,000. So 30,000 into 10 by 100 would be 3,000. This 3,000 we will show on the debit side of P&L account. Where do we take? Profit and loss account. Debit side we take 3,000. And the second effect of it is, it will be shown in the balance sheet on the asset side. How do we show it? We will deduct depreciation from, if it is depreciation on machinery, we will deduct from machinery. In our case, I said 30,000 is the value given. Deduct 3,000 and take 27,000 as the net figure. 27,000 we will show in the balance sheet as the book value of machinery. Okay, then we have bad debts. We have bad debts. Sir, what are bad debts? Time and again I am telling you, bad debts are irrecoverable debts. They are irrecoverable debts, the amount which cannot be realized from the customers. We sold goods to them on credit, but they are not in a position to pay. Then we write it off as a loss of the firm and we call it as bad debts. So what are the effects? If bad debt is given in adjustment, first thing is, as I told you, it is a loss. So we'll take it in P&L account, debit side. Where do we show? We'll take it in P&L account, debit side. And the second effect is in the balance sheet, on the asset side, we will deduct bad debts amount, from the debtors. Deduct bad debt amount from the debtors. Okay. Then one last entry we'll take. The last one is provision for bad debt. Okay, what is the last one? It is provision for bad debts. Or it is also called as reserve for bad debts. Reserve for bad debts. Now, what is bad debt and what is provision for bad debt? Bad debts are the actual loss that has occurred. Bad debts are an actual loss that has occurred. The party is not in a position to pay, or the party has absconded, and that amount is 100% a loss. But provision for bad debt is, we, out of our past experience, we anticipate that maybe, because it generally happens in any business, 100% amounts are not realized. So, as in accordance with conservatism concept, there is one concept which says that you have to be ready for all sort of losses. So, suppose we have debtors of 50,000. We are having debtors of 50,000. We have this much amount to be collected from the parties in the market. We ourselves will think that maybe 2% of this cannot be realized. We ourselves proactively are providing, saying that maybe we will not be able to collect 2% for some reason. So 2% of 50,000 is already provided proactively. Okay, so this 1,000, we call it as provision for doubtful debts, or we call it as provision for bad debts. Sir, what is the difference? Bad debts are the actual loss that has occurred, and provision is in anticipation. In anticipation, that is the anticipatory loss. It may happen, it may not happen, but we are ready with that provision. Okay, we are providing 1,000 as provision for bad debt. It may happen, it may not happen, but we are ready. So we will show debtors as 49,000 only. We will not show 1,000. We will not show 50,000. So in advance, we are ready with that loss which we have calculated out of our past experience, thinking that 2% amount डूब सकता, 2% अमाउंट नहीं रियलाइज हो सकता. हम लोग पहले से उसके ऊपर प्रोविजन क्रिएट करके हम लोग डेटास को 49,000 ही बताएंगे. तो प्रोविजन फॉर डाउटफुल डेट इज कैलकुलेटेड on data. If you have seen in my example, I have calculated provision 2% on data. So it is usually calculated on data. And what are the two effects? One is will show in P&L account debit side. Provision for doubtful debts will show P&L account debit side. And the second one is in balance sheet on the asset side. What we do is we will deduct from debtors. The provision for bad debts amount we will deduct from debtors. Okay, so this 1,000 rupees will show in P&L account. This we will show in balance sheet. Okay, so these 6 adjustment entries, there are so many entries, adjustment entries, but if you are familiar, if you are perfect with these 6 adjustment entries, you definitely will be able to crack this question in exam, and this will fetch you a 20 marks, which is a very good chunk of marks in your IP final. Okay, so with this, I'll conclude today's session. We'll do problems on final accounts with adjustment entries tomorrow. Okay, tomorrow we'll be doing problems on final accounts, taking into consideration this adjustment entries what we have discussed today. Okay, so good day all of you, take care, bye.